Requesting a statement of cash flows. Noble Company's accounting records provide the following changes in account balances and other information for 2019. So we have net changes given here for these different accounts. We have additional information. Net income was $9,900. Dividends were declared and paid. Land was sold for $1,700. No land was purchased. A building was purchased for $23,000. No buildings and equipment were sold. Bonds payable were issued at the end of the year. 200 shares of stock were issued for $15 per share. The beginning cash balance was $4,800. So we're going to use a visual inspection of these changes and this additional information to then prepare the statement of cash flows. And so obviously we'll start out with the operating activities, and we'll enter here net income. And let's go back up. Net income was $9,900. Put these in. Change the formatting so that we have the decimals, because okay. And if you remember, we start with net income so that we can then make the adjustments from the non-cash items and the cash flow, like the timing differences that are causing this net income to be different. So starting with the adjustment for non-cash income items, we know that that is depreciation expense. And so if we come back up, we have accumulated depreciation of $4,500. And so just again, remembering that the depreciation expense altered net income as it's reported on our income statement, but that actually wasn't a movement of cash. And so we need to add that back in. So here we'll put add depreciation expense. I suppose we could cell reference rather than typing for $4,500. Now here where we have the adjustments for cash flow effects from working capital, that's where we're going to look at all of our current assets and current liabilities and note whether there was an increase or decrease, and then adjust our net income accordingly. So coming up here with accounts receivable, the net change was a debit for $1,900, so that's an increase in accounts receivable. And we also have inventory with a credit of $2,400, which means there was a decrease in inventory. And so before we move on, because land is obviously not a current asset, so that's the end of our current assets, and we do need to come down and look at these current liabilities. But before we move on to that, let's look at the accounts receivable and inventory closer, and remember that the adjustment to those, to these current assets here in the adjustments to cash flow from working capital, those are going to be treated the opposite. So when you see an increase, that means we're going to subtract it. And when we say a decrease, that means we're going to add it. And so the reason for that is that if we had an increase in accounts receivable by $1,900, as far as cash flow goes, that means that our income was increased, but we didn't actually receive the cash flow because we have more receivables that we're waiting on to collect. And so that's why we're subtracting it out. So we'll put equals negative $1,900. And then inventory, if we had a decrease in inventory, the opposite would be true. It would be increasing because that means that that's been sold, and that expense is like pulling down the net income, but as far as cash flow goes, it would be increasing. So we need to add that. 2,400. Okay, like we said, land is not current, so we're going to move down. We already dealt with depreciation up here. So now we have accounts payable and salaries payable. Those are both current liabilities, and we need to account for both of those. And so we see a credit in accounts payable, which means there was an increase in accounts payable where there was a decrease in salaries payable. So we'll put increase in accounts payable, decrease in salaries payable. And these ones, the liabilities follow the description. So if we're saying an increase in accounts payable, then we transfer that over as a positive. And if we're saying a decrease, then we subtract that. Okay, so then we have the net cash provided by operating activities, which will just be the sum from net income all the way down. So equals sum, open parentheses, and we get 15,900. Now we're looking at the investing activities, and so this is going to be all of the long-term asset sort of stuff. And so when we come up here, we see land, a credit of 1,700, and when we look at this a little bit closer, we see that land was sold for 1,700, no land was purchased, and then a building was purchased for 23,000. So we received $1,700 for this land. So down here we'll put proceeds from sale of land, and that was 1,700. Then we have the payment for purchase of a building, which is here for 23,000, and that aligns with what they're saying we purchased it, so we can just pull that whole thing over. And so when we add these together, we have net cash used by investing of 21,300. And then finally we have the financing activities, and so this is going to include all of the equity and long-term payables, and so that's going to be the things that we're missing here, like the bonds and the stocks and the dividends that they told us were declared. So bonds payable were issued at the end of the year, and when we come up here we see bonds payable of 5,000, and so we can put proceeds from the issuance of bonds for 5,000. Then they told us 200 shares of stock were issued for 15 per share. So we'll put proceeds from the issuance of common stock, and that was 200 times 15. Okay. And then we also need to calculate dividends. And so let's come up here. They don't give it to us directly, and they don't tell us exactly how many stocks are outstanding or anything like preferred stock or anything like that. So we're going to have to kind of work backwards to figure out the dividends. So over here on the side, I'll come down. Let's go ahead and put payment of dividends. And then over on the side, we're going to do some extra calculations. So to figure this out, what we do know is that retained earnings is equal to net income minus dividends. And if we look back up at the information that we have retained earnings 5,300, a change of 5,300, and we have net income of 9,900, and so we could say here 5,300 is equal to 9,900 minus X, or dividends. And so then if we solve for X, we have the 9,900 minus 5,300, and we get 4,600. So payment of dividends is 4,600, and that's a payment, so it's obviously reported in the negative. And so we have net cash provided by financing is the sum of these three rows for for $3,400. And so overall, when we add together the operating activities, investing activities, financing activities, we have a net decrease in cash by $2,000. And they gave us the beginning cash balance of $4,800. So we can put the cash balance from January 1 and then add together the net decrease in cash plus the cash from January 1 to get an ending cash balance of $2,800. And so I guess we could have also figured out this net decrease in cash. They told us right here. Where did I just read that? I thought I read it as a comment, but we have the decrease in cash of $2,000 right here as well. So we have that information to fill this in. And if we had a actual balance sheet that we could look at, we could confirm that the ending cash balance on December 31st is $2,800 to confirm that our statement of cash flows was correct.